The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Webner. Webner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 18th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. Hope everybody out there had a great extended weekend. I know we did here at TFNN. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call preparedness is a step to success. You know, opportunity knocks at the door many more times than most of us realize. If the moment of opportunity is not seized, it may be because we don't recognize it or we are unprepared to seize it. So as an exercise today, ask yourself, what are you doing to prepare for success? Have you established and become fully committed to your goals and your outcomes? Are you willing to go the extra mile and give the energy and attention that the opportunity calls for? Are you willing to stand firm with your convictions and your principles? Are you prepared to stand alone if necessary? And here's the important question. Have you trained yourself to recognize opportunity when it knocks? I hear a knocking at the door, so let's go check out the opportunities in the markets out here. Right now, Dow Futures up about 14 points. They're trading out at 16,141. S&P Futures up 1.25 points. Trading out at 1836. NASDAQ up 4.25 points. Trading out at 36.65. King dollar back about 6 cents right now. Trading out at $80.12. Some movement in the euro. Some movement in the yen. Some movement in the pound. We got a little bit of movement in Goldilocks and silver. Most of our movement taking place yesterday. Right now, gold is trading out at $13.21. It's up about $3. Silver's up 25 cents. Trading out at $21.67. Light sweet crude up $1. It's breaking over its swing point. It's trading out at $101.54. Natural gas up 23 cents, up 4% here this morning. A quick peek around the globe out here. Let's see what's going on over in Europe right now. The DAX is off 4 points, so a flat market out there. FTSE is up 28 points. It's trading out at 67.64. Mixed bag over in China. The Hang Seng was up 52 points, and the Shanghai back 17. Our call number is 877-927-6648. Give us a call, folks. Would love to hear from you. So where do we begin the trading session out here, the trading day? Let's go take a look at the futures contracts. And let's go take a look at each of the daily. In fact, let's look at the daily, the weekly, the monthly, just to get an idea as to where we are at with things. So let's start off with the ES Mini, the S&P futures out here. Right now, trading out at 1836.25. If we take a look at, try to find our swing point high out here, we're going to come all the way back to December 31st. Now, the low on that swing point is 1834.25. You're at 1836. You're trading into it right now. If we see it close today, whether or not it tests the high, if we see it close today, and we did not see it close inside that swing point on Friday. Did I say Friday? Yeah, I said Friday out here. If we take a look at the Friday close out here, well, the low of the swing point, again, 1834.25. Friday's close was 1834. Missed it by a quarter point. Now, we're trading inside it right now, and the likely outcome is going to be a test of that high. The swing point high out there is 1846.50. So it seems to me that that is really where the ES Mini is trading to. Now, as you know, over the past week or so, well, a couple of weeks out here, I've been giving the danger signs, and I've suggested sitting out the last 25 points or so of this market because of some very negative reversal patterns that still exist today in the marketplace. Now, the ES Mini closes above this December 31st high. That's going to be your first indication that the coast may be clear out here. So that's going to be one area that we are absolutely going to be paying attention to. So on the ES Mini, it's 1846.50 out here. Right now, you're trading out at 1836. So about another 10 points to the north out there. And I suspect that that's what we're going to see is a test of that level. Let's take a look at the strong index out here. Let's take a look at the NASDAQ futures, the NQ. Right now, they're trading out at 36.64. Its swing point high was January 23rd. If we take a look at that number, that is 36.35.25. Well, the NASDAQ futures, they got above it last Thursday, February 13th, when they closed out at 36.51. So the natural target area, if we just simply take a look at it being in the math, we would take a look at expansions of the previous sets of swing points. That would be your high from January 23rd. That's at level 36.35.25, all the way down to the low that was put in on February the 5th, out at 34.12. If you take those two numbers, you subtract them, you come up with the difference, you multiply times 1.272, and you add it to the low of February 5th at 34.12. That's going to take you to the 36.96 level. That's your 1.272 expansion. At this stage, the NASDAQ on the daily has nothing really to get in its way. It looks like that is its next target level. It's trading at 36.64, so 36.95. Another 34 points to the north is likely its target level, and that is on the daily chart for the NASDAQ futures. If we go take a look at the Dow futures out here, you'll see the Dow futures weaker than the S&P, then the NASDAQ futures. Dow futures are trading out right now at 16,136. What are they doing? They're trading into these downdraft sessions here that really began on January 23rd, January 24th. They're doing it with lighter volume on this move higher. Nonetheless, 16,231 would be its next math target. That would be your 0.786 retracement. But as you can see, if it can hit that, it might as well go test out the swing point that was recently established out here. Its swing point is the January 21st level. That low is 16,253. And if it can close inside that, well, that would set up the Dow actually making it all the way back, potentially making it all the way back into the December 31st swing point, anywhere from 16,436 to 16,540. We probably will learn more from weakness with regard to what this market is doing, wants to do out here, because if you get a close above 16,231 in this stage here, that would be your 0.786 retracement, I would say, and you're closing inside that swing point from January 21st. That just sets up a move to at least go test that December 31st area. So that's what's going on inside of the Dow on a daily basis. If we take a look at the Russell 2000, again, I've got a little bit of a delay here, about a 10-minute delay. So right now it's trading out around the 11 to 48 area. If we take a look at retracements here, give me a moment here. Let me get rid of that. Let's take a look at retracements off of its swing point high, which is January 23rd. That level, 1181.30. Down to the low out here on February the 5th, you'll see that price is above the 0.618 retracement level. So it's now in between floors. The next floor on the way up is your 0.786 level. That is 1159 out there. Of course, it is trading into this waterfall cascade off of that January 23rd level. It's doing it with less volume. Nonetheless, it should get up and at least test the 1159 area. Well, heck, if it's going to test 1159, what it's more likely going to do is test the swing point high, or the swing point itself. Not necessarily swing point high, but the swing point itself. And the low of that swing point from January 23rd, that number is at 1162.50. So that really should be your target for the Russell 2000. That's what the daily charts are showing. I should be able to just flip these into the weekly and the monthly out here. So let's go do that right now. We can see on the weekly chart out here, you'll see a key reversal session out here, and that's from the week of January 24th. So we were looking at the daily swing point. We can also see here on the weekly chart that the Russell 2000 is actually trading into that swing point, into that key reversal, into that bear sash, bearish engulfing style candle out there. That says that you've got resistance at 1181.30. A close above that on the weekly basis, and I will say that the Russell 2000 is giving us the coast is clear sign out there. I knew I could get it out, but what it is doing here is the Russell 2000 is trading inside of that swing point. You close inside a swing point as it did last week. What does that say? It says, hey, I want to go test the high at 1181 out there. Now, the volume on that trading session, 368,000 shares. On last week, you were pushing into it with 547. So, on a weekly chart, you can see the type of information that it actually gives to us. And actually, this is the first time I'm looking at this. So, and I'm sorry that I didn't look at it sooner. So, what the Russell 2000 on a weekly chart is communicating to us as it was moving into a swing point, a swing point where the bears are absolutely hiding out here, that it wants to go test those highs out here. So that's what the weekly chart for the Russell 2000 is telling us. Let's go switch this over into a monthly time frame. So what it does say is if you were short the Russell 2000, you got to be asking yourself the question as to why right now out here. You must have a pretty good reason out here. In the case of the monthly chart, we can see that the monthly chart, you got price also trading into that swing point out here. Says that it too wants to go test the high. If we just take a look at A to B equals CD patterns here inside of the Russell, let's see, it has completed the 1-to-1 A to B equals CD. But the reality is, we take a look at the retracement off of that swing point, you'll see probably about a 50% retracement. This is coming off of the 2009 level that we're looking at. So the lows in 2009 up to the May 31st high, makes a pullback into October of 2011. That retracement there about 50%. We can see that the price action along that C to D leg really just as strong as we took a look at on that A to B leg out here. Here's your only bearish reversal signal out here. It's a bear sash candle. That says here, if you see it close above 1181, what we ought to see is we ought to see a move up into that 1 to 1.272 A to B equals CD. On the Russell 2000, that's a price level of about 1271.70. So the hurdles are out there. We're going to see if this market is going to take us over them. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, and hello to KZ out there. KZ trying out our Tiger's Den, folks. If you haven't had a chance to check out the Tiger's Den, why don't you join KZ out here? Just go to the homepage at TFNN.com. You can check it out for 30 days out there. If you'd like to see any of our charts in HD, that's the way to do it. We appreciate you following along with us on Tiger TV. We give it all to you out here. In fact, if you are listening on the radio, your mobile device at TFNN.mobi, thanks so much for doing that. Remember, you can get the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button. You'll see 3 little smartphone-type devices on that. Click on that. This show will stream live to you. Let's go back, take a look at the weekly charts for the other futures contracts out here. I've got the ES Mini up on my chart. We can see on the weekly chart, certainly it's trading into the swing point out here. And so that says resistance, 1846.50 out here is the number, 10 points north of where it is traveling. We'll see if it can get up and over that swing point. If it does, and what you've got here, you've got a nice little hammer candle that did form 2 weeks ago. That says that low of 1732 is very critical. If we see that low get taken out, That spells trouble. And trouble will take you all the way down at least to the next swing point, which is back in October of 2013 out of that 1700 mark. But right now, our focus is going to be on what's going to happen up here at this swing point high. Is it going to be a test and a failure on light volume? And today should be a light volume day. It's snowing up in the Northeast. What's new out there? In fact, folks, come on down, visit us down in Florida. You'll see nothing but blue skies, and you'll be walking around in your shorts out there. Let's take a look at the monthly chart here for the ES Mini. Let's go see if we see anything out here. Now, the monthly chart, this is really key, in my opinion, because inside of the S&P futures out here, we really haven't, last month was the most bearish candle patterns, and you like to see follow-up. You like to see follow-up, in this case here, follow through to the downside if you're going to be confirming a pattern. The pattern or the candle formation that we saw out here, big bear sash, bearish engulfing type session, but it's really a bear sash candle out there. It's actually stronger than a bearish engulfing candle. The last time that we saw any type of significant bears in the market on a monthly basis happened to be June in 2013. That there was close to a bearish engulfing, dark cloudish cover type candle out there. But you can see the following month gave way. Bulls just simply steamrolled them out here. Now, it's February the 18th, so we have, 10 calendar days left in the year out here. What does that make it? It might be 10 calendar. No, it would be 9 trading sessions or so left in the month out here. So we got time to go. But what we can see here is this little bear sash candle that formed last month. That's being taken out in a close where we're at right now or higher. Says that the resistance of any bears are gone. Now that bear sash candle that sets up resistance at actually the high of December 31st out here at 1846.50. So you've got a number of, this is the 1846.50, I can't understate, is going to be a very key number for us to be paying attention to out there. So that is the monthly, weekly. We already taken a look at the daily charts. Let's go take a look at the Dow futures out here. Let's just finish it off by taking a look at the Dow futures. Well, I guess we ought to take a look at the Dow and the NASDAQ if I've got time, or meaning time left in the show out here. Now, what did I have show up? I've got stochastics and the MACD out here. Let me go ahead and remove that. Widen up the screen here. So inside the Dow. Now, the Dow here, this is a very bearish pattern out here inside of the Dow. Normally, one of the bearish patterns, most candle reversal signals are 2-session reversals. The hammer, obviously, a 1-candle session. That's what you have right down here for the week ended February 7th. That says that low of 15,276 is really critical out here. But there are some 3-candle sessions, such as the Three River Evening and Morning Star. This here we're looking at as an evening star. Now, it's not a 3-candle session, and it really doesn't need to form over 3 sessions out here. In fact, what I have found is the more sessions that it takes to form this pattern, the more either bullish or bearish it is. So that says that the Dow is really important area, an important index, important futures contract for us to be paying to. Because here is the so-called Three River. Of course, this took place for 1, 2, 3, 4. This was the 5 River evening star pattern out here. You had a nice little gap up. That took place the week of December 27th out here. And then we had 3 little, high wave-ish, doji-ish type candles out here, all trading with inside the body of this candle, and then boom, it let loose here the week of January 24th, and this was a very significant reversal pattern out here. So really, for these markets to truly motor forward, you're going to want to see the Dow clear that high from January 3rd out there at 16,540. Right now it's trading at 16,137. We get back from this break here, we'll go check out how the markets are open. We'll go take a look at the metals markets, because I know you want to know what's going on there. We'll take a look at Goldilocks up $3, silver up 25 cents right now. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow off 15 points, trading out at 16,139. S&P up 2, traded 1841. Composite up 12 points, trading out at 42.56. Russell 2000 up 4 points. Apple up 4 as well. Microsoft down up 30 cents right now, leading the charge. The upside is Force Labs Inc. on a buyout from Actavis PLC. FRX, if you are in that, you're trading out at $93. Actavis is up a nice $15 as well, up 8% this morning. Tesla Motor up 2%, up $4 and change. Salix Pharmaceuticals now jumping into the charge here. They're up $6, up 6%. Mylan Inc., MYL, is the ticker symbol. They're up 6%, up $3. We've got Endo Health Solutions, ENDP, up 4%. Lead the charge to the downside. We've got Dresser Rand Group. DRC is a ticker symbol. They're off about 10% this morning, down $5.70. Netflix off $4, down about 1%. Kansas City Southern, KSU, off 4% here. Blue Cora Inc., BCOR, off 12.5%. Amazon down 1%. Amazon has been struggling here and has not participated in this rally at all. Under Armour off a couple of percent right now, off about $2.30. Cray, CRAY. Now, that's probably one you want to be paying attention to. That thing broke out again, I believe, on Thursday or Friday of last week. It's back about 4%, down about $1.70 this morning. Let's go take a look at Goldilocks and silver, see what we have going on out here right now. You've got silver, high-ho silver, trading out at $21.65, up another 1% here. Now, yesterday in the futures market out here, we saw silver go ahead and complete its measured move. You know, if you've been listening on the morning show, we have been watching silver, which has been trading in a sideways consolidation ever since November the 19th out there. So we have, a 3-month consolidation, 3-month basing at the bottom here inside of silver. It broke through that, and it broke through in a big way on Friday. Big, wide-ranging bar. Completed the move here in silver, completed that measured move is what I should say. Remember, when you break a consolidation, your measured move is going to be equal to or greater than the consolidation. So that's that little yellow box you see up on the second portion, the small little yellow box on the top of my screen. And that gave us a price projection somewhere in the $2.90 area out there, high 280s. What we actually saw was a move yesterday, intra-session, to $21.97 out there. So it has completed that move. What else has high-ho silver done? Well, you can see here on a daily basis, it has now moved into the extreme overbought condition out there. That says, okay, what else has it done? Well, if you take a look at the channel lines, we've been showing this chart out here for months and months and months, so these channel lines here have not changed. The channel lines I'm referring to are the downtrend channel that we're taking a look at from silver. And we're looking at this coming all the way back to April in 2011. Now, channel line versus a trend line, you're using the body of the candle. After all, the body of the candle is truly the essence of price anyways. The wicks, the shadows, as sometimes are referred to, those are nothing more than the extreme emotions during that candle session. In this case here, we're taking a look at daily charts out there. So we're using a co-located open or close. Doesn't matter whether it's an open or a close. We're using the body of those candles out here. And the red line, the top red line, that's what we're watching for right now. That is a long-term downtrend channel. It's been in there since April of 2011. We're at 2014. We're not at April just yet, but nearly a 3-year downtrend. I've done my math properly out here. And what is high-ho silver doing? Well, it's bumped its head right into the top of that downtrend channel. And then what did it do? It knew that it was up against resistance. It backed off last night. We want to watch that because let me tell you, folks, a break of that area, and it will not just be that silver is off of the bottom. It'll be silver is off of the bottom in a big way. It was consolidating at the lows for 3 solid months out here. Likewise, if that area acts as resistance, we ought to see some type of a pullback. I know you're asking the question, well, where is it going to pull back to? It's a great question out here. What we do is we take a look at our retracement ruler. We go from the low. Now, I'm going to use here the low of this last leg. So we're taking a look at the January 30th time frame. That's at $18.97. So if we go from that low all the way to the high that was put in here, intercession, $21.97. The dead cat bounce, the .382 retracement, $20.82. The .618, which is a normal retracement, would take you to 2016. Of course, that's a little more dangerous to get down to 2016, even though it's more normal. Why? Because all of a sudden you get back into the consolidation. So I would have to say that the range that you're really looking at for silver, assuming that it doesn't break out to the upside above this rising price channel. So that's the first assumption, is that it doesn't do that. If it does not do that, and we take a look at a pullback, at $20.82, that might be a decent entry point. Another decent entry point could be the $20.44 level, right around there, and I don't know if it's 44 cents, it might be 50 cents, so you got to cut me a little bit of slack here. But what you're looking for is perhaps a test of that consolidation range, much like bonds have done time and time again. Here, let me show you what I mean when I say bonds have done that. Their 30-year Treasury specifically is what I'm referring to. If we do take a look at bonds out here, James Bond, and then we'll go back to silver. If we take a look at the 30-year Treasury out here, we can see that here, if you're watching us on Tiger TV, big, huge consolidation pattern. Much like silver, though, really. This goes back to August in 2011. What was silver? I think it was October of 2011, right? So we're dealing with a similar type of a pattern. Now, this one happens to be a sideways consolidation pattern. It, too, had a diagonal descending price channel. Some black diagonal lines going across my screen. But nonetheless, you can see as bonds broke through that to the downside, and it says that over time we're going to see bonds in the 117 level. They have not made their measured move to the downside, but good chances are that they will over time. Breaks through that level, has gone back up, and it has tested it a number of times. The most recent time by getting up into that 135 level was back here not too long ago, the beginning of February the 4th out here. And, of course, it has rejected that area. That is a very important area for us to be watching inside of the 30-year Treasury. So when you go back to silver, in fact, if we take a look at a shorter-term chart in high-ho silver out here, let's go look at the 30-minute chart, see what it has done thus far. So as it was pulling back here this morning, it actually went ahead and completed a 1 to 1.272 A to B equals CD as it moved down at 5:30 this morning. Well, actually, it made the low here at 6:30 when it got down to $21.31 out there. And you can see as it was also doing that on the 30-minute chart, it was in the extreme. Well, we won't call it extreme. It was in the oversold condition. So at this stage here, it's just simply working its way off. Now, if silver's got some real legs here, because we can see it move from, the trampoline effect here of being in an oversold condition, and it needs to work its way off. If we I'm going to go ahead and erase this, make this a little bit easier for you. I'm going to erase the A to B equals CD down pattern, that 1 to 1.272. But we're going to take a look at retracements, though, of that entire pattern. And we're taking a look at this trading session. The high of 21.97 took place at, 8:30 or so, what is that time frame? 20:30. You do the math on that. I believe that's 8:30 in the evening. If we take a look at the retracement here thus far, we're up right around the 0.618 level, the normal area, 21.72. If silver's got some real legs here, it'll be able to easily take that area out. And if it doesn't, and if it does, what you really want to do is see it take out 21.83. And if it can't do that here, and now we're starting a little bit of this little subcorrection here, that's going to tell us, this is going to help us on the 30-minute chart here to understand what kind of energy is inside of silver and about a potential pullback out there. So you want to, just simply, and it depends on your time frame and your horizon, what we can clearly see about silver. If we go take a look, in fact, if we look at a weekly chart, so it all depends on what your time frame is out here. In fact, on the daily chart, I'll just give you one more piece of information. That little, here's you get your 4 little moving averages that I like to use: the 8-day, the 21-day. In this case here, I put the 50 and the 200. I actually like to use 55 and 233 out there, and that's because those are Fibonacci summation numbers, and it is all in the math out here. But if we do take a look at the 8, the 21, and the 50 and 200, you can see the green squiggly line on my screen. That happens to be the 200-day exponential moving average. Last time silver made it up there was on August the 28th. That was that swing point high. In fact, if you take a look at that swing point high from which is price level 25.12 down to the low that was actually put in here on December 31st out here, you can see it's kind of in between floors out there. So 2267 would be your 0.618 retracement of that area. But the 200-day exponential moving average right now acting as a resistance point inside of silver. So I think that covers silver pretty well out here. Let's go take a look at Goldilocks. Let's see what gold is doing out here. Now, gold, I had my target zone for gold. You can see at the 1333 to 1361. Of course, I've been speaking about that for quite some time. I believe it's more likely the 1361 is its target level out here. But if we take a look at gold, you'll see it's also making a similar pattern, the same pattern out here. Instead of showing the 50-day exponential moving average, let's just change that to the 200 for you on this chart. We'll just make that quick change. You can see that's gold also running into resistance of the 200-day exponential moving average after making a 1 to 1.272 A to B equals CD up at the 1333 level. It's also made some retracements out here. If you come off that same August 27th, 28th, August 28th swing point. You'll see it's a 0.618 retracement out there or very close to it. 1337.50 was the number for your 0.618, the actual inter-session high of 1332 out there. So you've got a 0.618 Gartley sell pattern. You don't need to necessarily have the nice tool that they provide us with here at Ensign to be able to draw in the colorful pattern. Of course, everybody is visual, and sometimes that just makes it easier to understand by taking a look at that nice blue, colorful pattern out there. So there's your Gartley sell. We do not have any kind of reversal signal here as of yet, but we do know that there is some strong resistance. Now, in the case of gold, you can see well above its price channel line out here. That is the blue line and trend line. That is the blue diagonal line that we're looking at on our screen. Hey, as long as we're over in the commodities section, let's go check out light sweet crude. Let's go see what it is doing or trying to do out here. And that is, as it has for the past several days, it's really trying to take out the swing point, which is from December 27th out there. That swing point high, 100.75. You're trading at 101.38. Nice little rising price channel. On Friday, we saw price move back and attempt to test that area here as it got down to a low of 99.43. Light sweet crude is now moving above resistance. The next level of resistance inside of light sweet crude is the 0.618 retracement area. That's at 104.22. What you have there is you've got a series of swing points that take you back into the October 2013 time frame. You've also got an A to B equals CD pattern that would be completing right around that range as well. There's your 1 to 1.272 is in the 103.61 mark. You'll see the 101.80 happens to be your 1-to-1 A to B equals CD, but I don't think that's where light sweet crude wants to stop as long as it can stay above this swing point higher of 100.75. So it does look to me like 104 is the next target area for light sweet crude. Let's take a look at natural gas out here. Natural gas up about 4% here this morning. Natural gas looks like it's going to try to make its way up into that 573 level out here. And that's the continuous contract that I've got up on my screen here right now, currently trading out at 545 out here. Natural gas on fire. Let's go take a look at some of these stocks that are popping and dropping in the marketplace. Let's go check in on Amazon first, because that has been truly so. If you take a look at a market that is up toward, look at the S&P up towards its all-time highs, the NASDAQ over it, well, at least the NQ. We'll take a look at the composite. You've got the composite must be over it now. It's trading up 17 points at 42.61. So we want to peek in on that for sure. But give me a moment here. We want to go take a look at where's the core holdings. So you've got bullishness in those areas, and yet. And Amazon's not a big weighting structure, but Amazon has been a high flyer. And you'll see here that Amazon has not even been able to make, well, it made the 0.382 retracement. That's all that it's done. That's coming off of the session high from January 22nd out at, 408.06 down to the low that was put in on February 5th. Out at 337.73. You can see it is even struggling here this morning. It's trying to get down into the swing point. Now, the key to be watching here in Amazon is how does it tackle that February 5th swing point. 349.37 is the high. 337.73 is the low. Only 4.4 million shares there. You are coming into it today already 691,000 shares with only 28 minutes in the trading session. Now, it hasn't hit the top of that swing point, but you want to be paying attention to that. Close inside 349.37. The low will be tested at 337.73. If it blows that away with volume, more than 4 million shares, it'll be setting up potentially an A to B equals CD down, and it'll be a doozy. It'll actually take Amazon down to about 270. My projection would be into the 275 type range out here. It's going to have to also, as far as volume that you want to see come out of this thing, well, something like 12 million shares would really be that confirmation out here. Otherwise, Amazon's going to find some support, even if it breaks that swing point, at probably the October 24th level, right around 326 to 332.65. But Amazon is struggling. Right now, the Dow's up 7 points, trading out at 16,162. S&P up 3 at 1842. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow off 13 points right now. S&P up a point. Let's go back. Let's take a look at the, actually, sorry to flip around here. I mentioned the composite. I want to take a look at the NASDAQ composite and see what it is doing. It's trading up about 14 points right now. And the NASDAQ composite now officially taking out the January 22nd high out there. That was at 42.43 out there. And so let me take a look at the weekly chart out here. The weekly chart is one that showed the bearish pattern out here. And here's like a nice big bearish engulfing candle. There was also price relative strength divergence that existed. This is a weekly chart. So the key here for this week, the key in my opinion with regard to this week is going to be, can the composite close above 42.46.55? It's trading at 42.56.60 right now. So, 10 points above that level. It shouldn't have too much trouble doing that. You can see here, nice big old hammer candle that formed here 2 weeks ago, the trading session of February the 7th out there. That says that low. It's a critical low at any point in time, which is out at the 39.68.19. But at this stage here, the strongest index, which gave one of the weakest signals out there, one of the more bearish reversal signals, has now cleared that level out there, and that turns a bearish pattern, which should be very bearish, into a bullish out there, and that is inside the NASDAQ composite. Had a request to take a look at the yen. I don't know which cross-rate currency pair, but let's go take a look at the U.S. dollar, Japanese yen. Let's go see what it is doing out here right now. Give me a moment to pull that up on my screen. Let me find it. Where is it? U.S. dollar, Japanese yen. Here we go. It's trading out at 102.33 out here. This had formed a nice little Gertley buy pattern. It's really been trading sideways for the most part during the last, since the early part of February the 3rd out here. Looks like what this is trying to do is to form an A to B equals CD to the upside. I would use the swing point low right out here from February 4th out at 101.66. That's my A point. My B point is going to be right out here at February the 11th. Again, it's a daily chart we're looking at, so that's at 102.69. Makes a retracement here. Let's go measure that retracement. See what we're looking at here. We're going again from the A point to the B point. Now, retracement here, 0.618. How about that? Right to the, not to the penny, but close enough. 101.49 would have been the number. It got down to 101.37. So, looks pretty normal to me that this is just making an A to B equals CD pattern. Once it clears the high of 102.69, its target should be about the 103.31 to 103.84 level. Looks to me a little more likely 103.84, 85-ish. Looks like a retracement. Let's go see if this sets up its next Gertley pattern. It most certainly does. So this has a nice little Gertley sell pattern that it looks like it is trying to sell up. It would look sell up. Setup. It looks like this is right around the range of what it is trying to do out here. Let me turn that into a little yellow shade out here. Let's go ahead and we'll have, that way we have two different patterns. Let me clean this up for you here momentarily. We'll get rid of the Fibonacci numbers. We'll get rid of that formation tool. We'll delete those. And here's what it is you're looking at. So you can see, looks to me you got a nice close to 1.618 expansion of your B to C swing point. So looks to me like the target range for the U.S. dollar, Japanese yen, right around that 103.60-ish type range out there. So, folks, if you are off to start your Tuesday, thanks so much for joining us here. If I take a quick peek, see what the market breadth looks like. Right now you've got net advancing issues 660 inside the New York Stock Exchange. In fact, New York Stock Exchange leading the charge on the way up, just drafting the Russell 2000. Folks, have a great Tuesday. I look forward to seeing you in a few minutes for the second hour, or we'll see you tomorrow morning. Have a great day.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.